All right, there's been a reason why Alibaba has been sometimes called the Amazon of China. They both have e commerce segments and cloud computing segments, which are the two areas I'm going to dive more deeply into in this video, looking at Alibaba's success in strategic investments in the e commerce segment and trying to see if Alibaba is also benefiting from the rising demand for artificial intelligence in its cloud computing segment, the same way that Amazon has benefited in its cloud computing segments driven by AI demand. So let's take a closer look here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the CEO of Alibaba's e-commerce segment said that following several quarters of adjustments to continue the user experience enhancement, their core business has gradually returned to healthy growth. The Taobao and Tmall group specifically have increased by double digits. The Alibaba International Digital Commerce Group has increased by 45% year over year, and the core public cloud offering has increased by double digits year over year. And finally, the AI related revenue has increased by triple digits. So, yes, yes, and yes, the answer to the question if Alibaba is benefiting from the rising effectiveness of artificial intelligence, if their strategic investments in the e commerce segment are demonstrating improvement? The answer is yes. And we see this in the latest quarter. The company did make progress in that regard. Now, this follows a couple of years of disappointing results for Alibaba. So, this isn't just a all clear sign. They still need to be persistent in this improvement to convince investors that this will be longer lasting. Now, one of the reasons is because they are offering shopping experience that offers quality products at attractive prices supported by exemplary service. And every company likes to comment that they have great products at attractive prices with great service. This is not a unique strategy for Alibaba. The difficulty is in the execution. We will know that they are successful on the back of the results. If the numbers show that the customers actually believe that they're getting quality products at attractive prices with good service. If customers feel that they're getting that, then they'll continue shopping with Alibaba and they'll increase their spending with Alibaba. That's how we'll know that they're effective in their strategy. So far, it's working. They have some progress in strong growth in not only the number of buyers, but also the frequency of purchases. So they got more buyers, and existing buyers are buying more often. Okay? Clear sign that whatever they've been doing is working. It's working. Now, before we move on to the next segment, I wanted to remind everyone that I did have Alibaba stock rated as one of my top 25 stocks to buy, and I last updated that recommendation on May 14th. I've had Alibaba stock rated as one of my top stocks to buy for 2024 since I think I made that recommendation on December 30th or December 31st heading into 2024. So I've liked Alibaba's valuation compared to its prospects for this year. Now, moving on, their product supply is important, right? Second is competitive pricing, and third is quality service. And customers appreciate all three of those things. They want your business to have a lot of choice. Choice is always preferable to customers, and they want you to have competitive pricing. They want lower prices. And if I was to argue, I would say that pricing is number one, ahead of choice. We've seen businesses, and I'll give you one example. Costco has had tremendous success, even though they've had relatively limited supply, but they've done great on competitive pricing. And that's what drives folks to Costco is pricing. And I would say pricing is the most important when you're dealing with consumers in this category, meaning the middle to lower income categories around the world, pricing is most important. And in fact, pricing is most important in very many categories. That's the one thing you've got to get right. If you get pricing right, you have a lot of room to make errors in other areas. For instance, Costco has excellent pricing. Its customer service is, I would say, I don't want to say terrible, because once you're actually in front of a customer representative, they are good with the customer service. It's just getting a hold of a customer service representative is extremely difficult, especially if you're going in person. You have to wait typically 20, 30 minutes in line just to speak to somebody in the customer service area. So they're doing really well with pricing, and I like that Alibaba is focused on pricing here. For fiscal year 2025, they expect that their gross merchandise value will gradually return to healthy growth. We're seeing the beginning evidence of that, and management expects this to continue. In the second half of the year, they will gradually introduce new monetization mechanisms aligned with new platform algorithms and product features that will further enhance centered revenue growth. So these new features are likely to boost monetization, meaning they will make more money per shopper and per business merchant on the platform. They're going to try to make more money off of each person on the platform. That remains to be seen if that will be effective. We're looking forward to that towards the end of the year. Finally, talking about artificial intelligence, right? You can't go anywhere without talking about AI nowadays. And Alibaba's cloud product strategy for the AI era and the quality of their revenue continues to improve because they're focusing on AI areas. Now they're creating competitive advantages in their cloud technology and scale, and they're reducing prices for their products globally. That's how they're aiming to take share. Make the products more powerful and at the same time lower pricing to make it more attractive for businesses to use their artificial intelligence going forward. So they believe that this wave of generative AI driven technology innovation is just in the early stages. And that's what we've heard from many businesses worldwide, and Alibaba is no exception. Starting in 2024, they've seen a rapid increase in customer demand for AI. So it's happening for Alibaba just as it's happening for Amazon and Google and Alphabet and Nvidia and all of these companies, Taiwan Semiconductor, worldwide. Therefore, we are actively investing in our cloud computing product mix, especially in AI infrastructure, to capture the monumental opportunities. Similar strategy that we saw with the cloud companies based in the US, like Microsoft, Google, and AWS. Alibaba is focusing on a similar strategy. I think that works. It's worked so well with, Amazon, Microsoft, and Google. It's reasonable to expect it will be effective for Alibaba as well. So again, just to remind everyone, Alibaba is on my list of top 25 stocks to buy. I like the progress they're making in re-accelerating growth, their position in artificial intelligence, and their valuation seems cheap to me at a forward PE of less than 10. I understand the geopolitical risks, but I think that's more than compensated in its cheap valuation. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.